Last week we saw a rotation take place, and it's important to follow what's happening because money is shifting and moving here as we come into the Q2 earnings season, which starts mid-July. And there's a strong seasonal trend that actually happens at this time of the year, and we'll talk about that later on. But last week we saw a little bit of a shift from some of the growth sectors into some of the cyclical sectors and defensive sectors as well. We saw the defensive sectors actually do quite well. Now that's a good sign in a way, because that means investors are still interested in investing in the market. The healthcare sector did extremely well for no real reason, but it was more about money shifts that were taking place. We would much prefer investors to go to the defensive sectors than everything gets sold off. And we saw a lot of rotation earlier in the week when we saw gold actually not do so well. Early in the week went below 4,000, and then later on in the week it actually started to behave like gold did back in 2025 a little bit, where we saw it actually go up with the same type of market conditions. So lots of stuff happening in the markets. We saw Micron come out on Wednesday with its earnings after the bell. Now investors were really putting a lot of emphasis on Micron earnings. Before it was about NVIDIA, but Micron's been the darling for a little while now. And here we are in the semiconductor space, the chip space, which has been doing really well. So it's hyperscalers for a while. Then we've really seen that whole shift happen to go more into the semiconductors and memory space. Memory went up a lot recently. If you buy a computer, I had to buy a computer recently, and memory was quite expensive. I bought the Apple before they raised their prices this week, right in mid-market. So these are with current existing products. Usually Apple doesn't, I can't remember the last time it did this. It raised the prices on products mid-cycle. Usually when new products come out, they raise the prices. This is all of a sudden, hey, we just can't afford this anymore. Memory's gone up so much. And they raised the prices a lot this past week. But getting back to the markets, we'll talk a little bit about what's happening with the money flow, with the shift in technology stocks overall, and some of the other sectors, because it is interesting. And we'll talk about some positive trends in the marketplace at this time. So if we take a look here, last week we did see the S&P 500 down over 1% for the week. But look at technology down 6%. Now it's interesting that Micron, which was the big focus of the week with investors, they came out and they beat earnings. They actually went up the next day by over 15%. But yet technology was down. So we're seeing this shift away from some of the stocks. We're really seeing money in motion here. But look at the defensives. Look at healthcare. Really, that's up a lot. This is the huge shift. So we've seen this typical from technology into healthcare and some of the other defensive sectors. This is a sign that investors really want to be invested, but they're becoming more cautious with the market. So real estate was up as well, telecom was up, consumer staples, and utilities. This is investors really becoming a little bit defensive. It doesn't mean the market's about to correct. In fact, the fact that the defensives are actually up is a positive scenario. If we take a look at some of the other markets in comparison, we saw the TSX, the Canadian stock market, up just slightly last week. We saw the NASDAQ down over 3%. Small caps just slightly positive as well. Emerging markets down, China down. So a little bit of a risk-off move that was taking place. If we take a look at what's happening with some of the subsectors here, here's uranium. It was down 7%. We saw a little bit of strong performance the week before or the week before that. It's been a little bit back and forth with uranium. We saw some news flow that really helped to bolster that sector a little bit, and then we saw it pull off last week as well. If we take a look at metals and mining, this is one of the results of this. Metals and mining was also down last week. So although the industrials, the material sectors on the big sectors in the market did okay last week, not as good as the defensives, the more cyclicals really did not do that well. And so as a consequence, we did see uranium pull back. If we take a look at gold miners, down almost 6%, gold down 1.6%, but that doesn't tell the whole story here. We saw the gold get crushed below 4,000. And I'm not going to spend a lot of time on gold because I did that last week as well, but it went below 4,000, which was a key level. And it looks like we might see in the place right now where some of the macro, or I should say the gold tourists that were really playing the momentum might be getting washed out at this level here. And we did see it in the second half of the week actually start to pick up, which was a good sign as well. Home builders was up last week. We did see interest rates actually head down lower, which is interesting because we've seen that interest rates moving higher. And as a result, we did see home builders do quite well. If we take a look at this graph here, this shows that everybody's piling into U.S. stocks. This is from the Federal Reserve, from Fred, and let's just zoom in here a little bit. You can see here that once again, we are witnessing right here that everybody's piling in to the U.S. stocks. For a number of reasons, we've seen weak economic growth in Europe. They continually to be weak, and investors are saying, why do I want to be there if they refuse to actually do anything about their weak economic policies? Other countries around the world have been performing well. Emerging markets with the stronger U.S. dollar has been suffering a little bit, so we've seen money flow into the U.S. Recently, but it's not flowing into the tech stocks quite so much. If we take a look here, this actually shows the cash flow, the free cash flow for Oracle, Meta, Google, Amazon, and Microsoft overall. And so if we take a look here, well, here is, in this case, so here's Oracle, and this is the one that's got the biggest negative cash flow, and you can see that here in the blue bars going here. And Meta just turned red here as well. But the overall trend for all of these companies is that their positive free cash flow is going down, with a couple of them in the negatives now. And investors are getting a little scared with that, with some of the news that's been coming out. And that's why we've seen that shift over to the semiconductor sector as well. If we take a look here, this is the quarterly free cash flow of Amazon, Google, Meta, Microsoft, Oracle, minus, in this case, Micron and NVIDIA. You can see this has just absolutely dropped off here, which is a huge factor. Well, last week, here's Micron, though. Look at Micron on its earnings release came out. It was very positive. Now, that could have really hurt the market overall if we did see Micron not come up with strong earnings, but they did. And the market was impressed. We saw that spike up after the bell as a result. If we take a look here, spot price of gold, and this is below 4,000 here. This is what we've seen recently, but this doesn't show you here. Later on in the week, we did see it start to pick up here with some positive. It looks like it might be coming into play here a little bit. It does start a strong seasonal period in early July. I put this graph here. In this case, this is the expectations that the Federal Reserve will hike interest rates. And if you want to take a look here, they've been going up, 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 up. And this is before Warsh. So here we are with Warsh in here, and we've seen this happening here. And this has been the wrecking ball here. And so if you take a look down at this bottom panel, this is the US dollar. So the US dollar has been moving up at a fast rate, and rate in currencies actually matter. So this has actually been the big problem here is the US dollar, and it's been moving up fast. And that's been affecting emerging markets, gold, etc. If we take a look, we can see here that, I thought this was an interesting announcement. OpenAI and Broadcom unveil AI chip called Jalapeno. And the reason why this is important is we're starting to see more and more competition come in for different chips as well. So it's we're going to start to see more different suppliers come in, different agreements as well. So not all the big winners like Micron are going to get the favored deals forever. I found this graph extremely interesting. This is showing the line of red shows the hawkishness of the Fed, and the black line shows inflation expectations. And if you take a look here, the red line has been moving higher, so the Fed speak is becoming more and more hawkish overall. They usually have a similar relationship, but it's becoming overall. Before even Warsh took office here, it was rising, but look at the inflation expectations. Despite inflation being high, we've seen inflation expectations in the short term actually go down. This is an extremely wide gap. My belief is that we've probably seen peak hawkishness for the Federal Reserve. Yes, Warsh needed to come out, and just like every other Federal Reserve chairperson when they get elected, they talk tough. But we'll have to see what happens when something goes wrong, how tough Warsh is. I don't think he's a Volcker. I'm convinced that we're going to actually see a rate hike in the markets in 2026. I think there's going to be a lot of tough talk about, well, maybe we will, or whatever it is. But I think we're going to start to see that fade now that at least Warsh has got some credibility with talking tough when he took over. But the market's saying, well, we see inflation actually heading lower. Here's a graph of the US dollar here. You can see here that if we go all the way across, that's a point we saw of it's around 100 here. We're seeing that break through, and this is what's causing problems in the market. As I said, we'll have to see if we do start to see a test coming back, but this is usually a pattern where we could see the US dollar move higher. I found this post from Forbes extremely interesting. If we take a look here, we've got the statement basically saying that OpenAI is reportedly now leaning toward delaying its public debut from later this year to next year as Elon Musk's SpaceX stock tumbles after its record IPO and the public tech sector, tech market slumps more broadly. They're trying to time this on their expectations that it'll be better next year. I think that's a huge, huge mistake. If you're in the market, you know the price is the price of where you're at right now, and things could be much worse for the tech sector next year. So, I understand a little bit of a delay, but to say, well, we're going to wait into 2027, let's follow this and see how this turns out, because it'll be interesting on this one. On Friday, we did see the South Korea stock market, which has been the darling here, going up huge amounts over the last couple of months, just absolutely huge. And that's because the two biggest stocks on the exchange are semiconductor stocks. So you can imagine what was driving that. Well, on Friday, we did see that actually head much lower down. It actually went limit down as well during the day. So we'll have to see what happens on Monday. And look at Oracle here. It posted its worst week since 2001. It was down 19.4%. That is not good overall. So this shows you that investors are being shifting from the hyperscalers, and Oracle has the most indebted, so they're punishing Oracle, and they've been shifting into the semiconductor stocks. And then we saw on Friday, the COPC actually head lower as well. So it's going to be interesting to see if there's more shifting take place as well. I'll talk about what I think might happen with this sector coming up, but in a second. But we are starting to see some rotation. Here's an interesting fact that came out on Friday as well. And this is Apple seeks U.S. clearance to buy memory chips from CXMT. Now, this is a private Chinese company that makes DRAM or RAM. And that is really interesting. I don't think they're going to get permission to do it because it's a Chinese company. Micron is focused on the U.S. Market, but going to a private Chinese company is a replacement because the memory chips have been going up. I don't see how the U.S. is going to allow this to happen. But Apple's getting desperate here with the price of memory. If you go out and try and buy a computer right now, it's become extremely expensive because of the price of memory. And Apple is trying to find other solutions. And yes, down the road, we will see more chip or memory companies come online, but it takes time. That's the problem. These plants cost tens of billions of dollars to produce, to actually get up and running. It takes a long time. So right now we have this huge demand spike that we've seen with AI, and it's causing some problems. We'll have to see what happens on Monday or coming up shortly to see if this actually takes place. I don't think they're going to be allowed. Just a quick note before I talk about what's coming up next week on the economic results. I did do a podcast just very recently as well, and it was on uranium's next move. I talk a little bit about the fundamentals, long-term fundamentals for uranium. If you're interested, I'll try and put the link down below on this video as well. If we take a look here, last week in the U.S., we did see inflation come out, and it was actually quite benign. It came in as expected here on the PCE month over month and the year over year. If we take a look at GDP, it was expected to come in at 1.6. It actually came in at 2.1%. That's actually not bad. The U.S. economy is picking up steam. It's compared to the other countries around the world, especially compared to Canada. Canada has really been suffering recently, but 2.1% is actually a decent number. We're seeing a lot of money flow into the industrial base of the U.S. Next week, coming up, last week as well, we did see the PCE Q over Q came in also as expected. So that number was a little bit high. So inflation still remains high at this point. If we take a look coming up, manufacturing. So on July 1st, we do see this number. The survey number is 53.9%. Prior was 54%. So really about the same. Anything above 50 is a positive. Now this is actually quite good because manufacturing back in 2024 and into 2025 was below that 50. It was the services that was above 50, so dragging up the composite. But manufacturing is actually picked up here a little bit and holding in here. So the U.S. economy is doing okay. Non-farm payroll numbers, remember that number last month? It was actually pretty good, much higher than expectations. Well, this number is expected to sort of be what we expected last time, down to 115,000. The unemployment rate's expected to remain at 4.3%. Now, that's low, but there's a lot of stuff going on with people flows in the U.S., so it's difficult to judge if that really is a true number here at this level, but the economy is doing okay, so overall, we still do have a fairly low unemployment rate. In Canada, last week we did see the month over month come in higher than expected at 1%, and we saw the CPI year over year higher than expected, 3.2% versus expected 3%. And the core median, which is really what the Bank of Canada uses, 2.1%, and the trim 2% as expected. Overall, on the mix of this, inflation was higher than expected. It's still above that 2% target. The trim and the median really are getting really close here on that, and maybe we do see the Bank of Canada sort of walk away from any potential rate hikes if we see the price of oil remain low. We'll have to see what happens. What do I expect to happen in the markets this week coming up? As I mentioned earlier, we saw that rotation take place, and that's quite concerning given that Micron actually came out with stronger than expected earnings. That was supposed to actually really help the broader tech sector, and it just didn't do that here at all. And we saw healthcare being the top major performing sector, which is just crazy because nothing happened. And I do believe, as I mentioned earlier, this is really showing that investors still would be in the market, so they've shifted over to the defensives at this point. Now, I got to tell you, from a seasonal point of view, we tend to see the stock market actually do quite well from the last couple of days in June, which would be Monday and Tuesday, into 5 days after Independence Day, or even out further to around July 18th, because that's when the earnings come out. And we see in earnings months, January, April, July, and October, we see the stock market in the first 18 calendar days on average do quite well because investors are actually front-running the earnings. And earnings in Q1 were extremely strong. We saw the earnings beats come in at 84%, which was really strong compared to historical norms. And we saw the revenue beats come in at around 79%, which is also strong as well. And we've been seeing a lot of upward revisions on average. So you have to watch out because of which companies are doing it outside of tech as well. So, but overall, we've seen strong earnings, and investors are looking forward to this as well with optimism to Q2 earnings releases as well. So on a seasonal basis, we tend to see the stock market do okay coming into mid-July here. And as far as the rotation we saw last week, I think that's more of a warning. I think we could see the other sectors, the growth sectors of the market, do okay. If we see a risk-on move, I still think they can do okay here and actually maybe even pick up the lead here a little bit. We've seen this before, where we've seen this rotation where investors shove over to the defensives for a bit and then come right back into the growth sectors. That could be taking place, but I think it is a warning in the market right now that we might see some softness later on for the market. I think the market could, once the earnings start coming out and if it's priced in, that's when some softness could take place. But overall, at this time, unless we see other news, it's not really a big week for economic news. We don't really have any strong earnings coming out. There's a couple of little companies in the States still reporting Q1, but so the market's really dependent upon other news. And right now, as far as the war, the ceasefire, whatever you want to call that, it seems to be at least on pause, and there's a ceasefire deal, and oil looks like it's flowing a bit. There might be some skirmishes along the way. So we don't see a lot of negative news, and I think if we don't see that negative news here, I think that the positive tendency for the market will be there for the market to actually do well, do okay this week and into the beginning of July as well. So maybe it won't be a crazy week this week. We'll have to wait and see. Thank you very much for joining me today. If you like the video, please click the like button and please consider subscribing to this channel. Thank you very much.